Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is August 4th, 2013. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's take a look at current market trend and our strategy. Your stock market is in the uptrend. Many leading stocks gapped up after releasing earnings. My plan is to continue long the general market and sector through the leverage ETFs, and also long the strong stocks that have the potential of making the runaway gap. Let's take a look at major indices. DAX index in the uptrend. Shanghai Stock Exchange Index in the downtrend. Now it's hitting the resistance again. NASDAQ index is in uptrend. Here it break out from the little handle here. It's going up. Mid cap index uptrend. Small cap index also in the uptrend. SP 500 large cap index in uptrend. Gold monthly chart. Gold is still in the downtrend. Gold weekly chart. Right now it's holding below the 50-day moving average. So the gold in the previous year, in the last whole year, every time it hits 50-day moving average or close to that moving average, it will come down. So right now, 50-day moving average is still the resistance. Silver is in the downtrend. US dollar had a correction lately. Crude oil broke out from the previous resistance. It's going up. Right now, it may pull back short term, but the trend is up. Gold mining stock index is in the downtrend. Friday, it broke down 50-day moving average again. This is not good for gold. Real estate stock index is in the downtrend. It just came down. MBB is a mortgage. It's a mortgage bond. So when this bond is going down, mortgage rate is going up. So right now, MBB is in the downtrend. OIH is oil service ETF is going up. Semiconductor ETF, SMH, going up. XLE is energy sector ETF, is also going up. XLF is a financial ETF, going up. XOP is a gas and oil exploration ETF. This is also going up. It broke out from previous high, so it's very strong. I'd like to share with you about runaway gaps. Some strong stocks gapped up after earning or after releasing some other good news, and those stocks never look back. They just keep on going higher. And so those are the stocks I'm trying to buy and hold for a while. The criteria is a price will gap up 10% or more, volume will double or more than the 3 months average volume. And prior to the gap up, the stock should have a base, should be in a base building. How to trade the runaway gap? My strategy is buy and open of the gap up day and set a stop around 3% to 5% below the gap up open, and take profit 20% above the gap up open, or hold longer. How to decide whether to hold a stock longer? And first of all, the stock has to be in a sector that the new technology or something that profoundly changes society, such as internet, social media network, 3D printing, new drugs, and all that. So those company has potential to multiply. Usually other company that change the human life tremendously. So, and then they have to be a dominant player in their sectors. They also must have strong fundamentals in terms of high earning growth. And most important is a chart pattern. They must have constructive chart pattern, not destructive chart pattern. What is a constructive chart pattern? On the up days, the volume is high. On the down days, when the stock price pull back, the volume should be low. That's the indication that institutions are buying the stock, not selling it. And also, if it pull back and the major moving average, such as 50-day moving average especially, it should be supported. It should not break down that moving average. The destructive chart pattern just the opposite. And on the up days, the stock has a low volume. On the down days, it has a high volume. Or it has a high volume not going anywhere. Stock just stay flat. That is a sign that institutions are selling their stock. And sometimes the stock would break down the major moving average, such as 50-day moving average. That's a sign that you must sell. You cannot hold the stock like that. And let's take a look at some of the stocks that reported earnings recently and then they gap up. ANIK report earnings this day, and this is the open buy at the open. If you would buy at the open after it gap up, you still have a lot of gain to make in the next day or two. C-Trip, this is a gap up. If you buy at open, this thing may get stopped out. Looks like it's gonna fill the gap. EGOV, this is a gap up day. EMN, this is a gap up day. This is the open price of the gap up day. Facebook, on the gap up day, volume was extremely high. This is like 10 times of the average volume. And Facebook, since its IPO, this is the first buy signal. So Facebook is a very large company, and it's in its social media network, and its website has connected a lot of people. So this is in a revolutionary technology sector. So Facebook is definitely my focus, and this stock has gapped up with a high volume. That's institution buying, and this earning release has changed the Facebook's fundamentally. So the fundamental has become really strong. So if you buy and the gap up open day, you still have about 20% gain to now. So this is a very strong stock. Right now it's extended, but we can wait for the pullback. LKQ, this is a gap up open day. LinkedIn had a gap up on Friday after release earning. Previously, LinkedIn gap up from here. You see, it was a base here and the gap up here. And if you buy an open of the gap up day, and you still have a lot of gain to make. This gap up is at $140, and eventually it reaches $200 and then correct. Now it made another base and going up again. MELI, this is not good. This is a gap up with high volume. However, it closed below the open. That's a reversal. So this is not a good chart. New Skin had a base here. It broke out from base right here, and then the earning they pre-release that they're gonna have a good earning, so the stock gap up. And now this is an earning here on Thursday. Stock went up again, and very pretty healthy volume. So this is a strong stock. This is a stock one should hold. Qcore had a gap up on the earning day. So this is a gap up on the open. If you buy an open that's below $60, you still have a lot of gain right now to hold on to it. So this is a strong stock. Soda also gap up on the earning, but this stock is still making a base. TripAdvisor gap up on the open right here. Yelp gap up open here. And the YY, this is not good. This stock actually came down after release earning. Anyhow, those are the stocks that already gap up and now is very extended. They're not, they don't have buy signal right now, but we can analyze their chart. And in the future, if we see other stocks has a similar chart, we will buy. Here is a next week's earning report. Tuesday, Jazz Pharmaceutical, Regeneron, REGN, and Michael Kors. Wednesday, Green Mountain Coffee, GMCR, and TNGO. This is a software company. All the 5 companies have very strong fundamental. Let's take a look at their chart. GMCR, it's in the base. See if it can gap up. Jazz, It's already up a lot. Course, Michael Kors already broke out from the base right here. Regeneral is making a handle right here. It's a cup with a handle. TNGO, it's also in the uptrend. So those are the stock that's on my watch list, and I will say what they do after release earning. Okay, in this market condition, what to do? It's an earning season. I would buy a stock if it gap up from a base after report strong earnings, and I will set a 3 to 5% below the gap open as my stop price. If the stock came down 3 to 5% range, I will get stop out automatically. I will consider take profit if the stock goes up 20%, except if it ran up 20% in 3 weeks from the gap open, and I will hold on for 8 weeks and reevaluate to see if the stock has any troublesome chart pattern. That's all for this week. See you next week.